Hello everybody, and welcome back to the business realm. It has been a very long time since I posted a video on this channel, but from now on forward, I'm going to try post one video on here every single week, and these are going to be to hopefully help you throughout your crypto journey. Today, talking about how I pay very little taxes on my crypto, and to hopefully tell you guys a little bit more about these taxes and how you could potentially save some. So my situation is quite specific, and that is because I actually do not reside in the US. I'm not a US citizen, and thus I have different rules. I am a citizen of the Netherlands, which has a very different ruling when it comes to crypto. I actually decided to look up a list of countries that do not tax Bitcoin gains. Basically, if you in the US were to buy crypto right now, and the point you'd sell it at, you'd actually have to take that profit and then get some tax over that, which is called capital gains. But in the Netherlands, basically how it works is if you buy crypto, it doesn't matter really how much, you have to pay a certain percentage of tax regardless of whether or not you sell. And it is basically the same amount of tax if you had euros or crypto. It does not really matter. And it doesn't even matter if you have any other currency for that matter. It basically works this way. If you have between 0 and 30,000 euros, and by the way, these numbers have all changed a little bit in 2021, but it's still about the same idea. Even though this has gone to 50, this has gone to, I think, 100, and this has gone to about, I think, 1 million or one, whatever. And these percentages also changed just a little bit. It's still the same idea, so it doesn't really matter. If you have between $0 and $30,000 in crypto and US dollars and euros, whatever, you have to pay 0% tax. So even if you trade all day long, 50,000 transactions a day, making, just huge sums of money for you at that point, as long as it is below $30,000 the 1st of January of the year, then you're good. 0% tax, zero taxes whatsoever. If it's between 30 and 70,000, between this, you have to pay a 0.58% tax. Now, actually, what they basically do is they take a look at, okay, you have a certain amount of money, and this is going to be partially in the savings category, which is 0.07% or so, and partially in the investment category, which is 5.6% or so. They take some ratio of that, and then they tax that 30%, which is what this effective tax rate is for. They already calculated it, though. And again, that gets higher the more money you have, but this is only a one-time tax regardless of how much money you made throughout the year, regardless of what percentage profit you made. So if I were to, for example, have 50 million euros and all of a sudden I'd make it, I don't know, let's say 1 billion euros, I'd only have to pay a 1.7% tax on the total that I have 1st of January. If I, for example, the 31st of January really lose all my money, but the 2nd of January I make everything back, that's the lowest tax you could ever get. So that would actually be one of the best scenarios ever, that you lose 99% of your value, bringing you below this 30,000, and then the next day you make 5 million% profit. All of a sudden, zero tax on your crypto. It is that fun. But hopefully you guys understand now that every country has a little bit different rules, because in the US, it works very differently, and in most countries that you can find here, it'll work a little bit differently as well. But I just thought it would be interesting to show you guys that there are different taxes around the world. Now, for example, Belarus here has a new rule, and you should know that cryptocurrency payments, basically income, is mostly the same around the world, where it's basically just counted as normal income, but then in cryptocurrency. However, most of this stuff really refers to the fact that you are investing, which is talking about capital gains tax. And in Germany, for example, you have no tax as long as it doesn't exceed 600 euros, or if it's held for over a year, it is tax exempt and whatnot. Hong Kong has some different rules and whatnot, but basically let's talk a little bit more about the United States and how you, in the US, which you're most likely watching this video from, can actually, hopefully, get some lower or even zero cryptocurrency gain tax. There are 4 ways. One is to buy cryptocurrency in your IRA. So there's been a very big debate about whether or not this is a proper/good decision. I've seen some people say if you put something so volatile in your IRA, you're deemed to lose money and you're deemed to be broke forever. However, I would like to personally disagree, but hey, that is everybody's own opinion. The easiest way to defer or eliminate tax on your crypto investments is to buy inside of an IRA, 401k, defined benefit, or other retirement plans. If you buy crypto inside of a traditional IRA, you will defer tax on the gains until you begin to take distributions. If you buy within a Roth, you pay zero tax on the capital gains earned in the account. To buy cryptocurrency inside of a retirement account, you must move that account outside of the US and into an offshore IRA LLC. Then that IRA LLC can open an offshore bank account and wallet to make the investment. You'll be the manager of the IRA LLC, and in control of the investments, you'll be in total control of the account and the sole decision maker. To get your IRA offshore, you'll become the LLC in a zero-tax country, and then you move your account from the current custodian, such as Fidelity, to one that allows for offshore investments, such as Midland IRA. Finally, you open an international bank or brokerage account and transfer the cash from your retirement plan into the account, and from here you write checks or send wires, you make the investments and can choose cryptocurrency. If you want to invest in foreign real estate, physical gold, or crypto, go for it. You can also use your IRA to get residency in countries like Nicaragua or Panama. Because you are the investment manager of your retirement account, you must follow all the IRA's rules, and you can't borrow from the account, you can't personally benefit from the investments, and must treat the IRA as a professional investment advisor would. That is, all decisions should be in the best interest of the account. If you already have a sizable retirement account, then buying cryptocurrency in your IRA might make sense. If you're young and you don't have a large retirement account and can't quickly build a defined benefit plan, then consider the options below. For your information, total annual contribution to your traditional and both IRAs or Roth IRAs combined cannot exceed $5,500 under age of 50 and $6,500 age 50 or older. It's just something fun to consider though. And if you're thinking about what countries then, well, let's quickly look a little bit further through this list. That's why I waited for it. Hong Kong isn't a country per se, but a special administrative region in China. Theoretically, autonomy over its own affairs, and Hong Kong's tax legislation on crypto is a broad brush affair, even after new guidance which issued earlier this year, especially whether crypto are taxed or not, depends on their use. If digital assets are bought for long-term investment purposes, any profits from disposal would not be chargeable on profit tax, which is definitely interesting. And of course, that doesn't apply to corporations, which is quite logical, I would say. In Malaysia, crypto transactions are currently tax-free, and crypto don't qualify for capital gains tax, which are quite interesting to me as well, because digital currencies are not considered assets or legal tender by the authorities over there, which may be good, may be bad. It just depends a little bit on how these taxes are going to develop further. Malta, the government of the so-called blockchain island, recognizes Bitcoin as a unit of account, medium of exchange, and store of value. Malta doesn't apply capital gains to long-held digital currencies like Bitcoin, but crypto traders are considered similar to day trading in stocks or shares and attract business income tax at the rate of 35%. However, this can be mitigated to between 5% and 0% through structuring options available under the Maltese system. But again, if you want that, you have to look a little bit further into it. Portugal, for the sale of cryptos by individuals, have been tax exempt since 2018, and crypto trading is not considered an investment income, which is normally subject to a 28% tax rate. However, businesses that accept digital currencies add payments for goods and services are liable to income tax, which is logical. For Singapore, capital gains tax does not exist there, so neither individuals nor corporations holding crypto are liable, but companies based there are liable to income tax, which is logical. But this would, in my opinion, be one of the best options if you ever had to choose. Singapore does look very, very good. The authorities consider payment tokens such as Bitcoin to be intangible property rather than legal tender, and payment in cryptocurrency constitutes as a barter trade where the goods and services are taxed but not the payment token itself. Then we have Slovenia, no capital gains tax when they sell Bitcoin, and gains are not considered income. However, companies that receive payments, of course, have income tax, or at least corporate tax. Notably, the Mediterranean country doesn't permit business operations in crypto, such as only accepting Bitcoin as a payment. Switzerland, it's no surprise that Switzerland, of course, is good with this too. It is one of the most forward-thinking tax policies where crypto profits made by qualified individuals through investing and trading are treated as tax-exempt capital gains. However, income from professional trading and mining is subject to income tax. Notably, tax laws differ regionally, and an annual wealth tax is levied on the total amount of cryptocurrencies owned, along with the rest of an individual's net worth, which the wealth tax is basically the same thing I would say you have over here. However, here the wealth tax is quite significantly lower than over in the Netherlands, which may actually turn into a nice sum. 1.7% still can be quite a lot of money if you have €1 million. It's quite a lot. The other two options for US citizens were buy crypto in your life insurance policy, but even this one I found pretty difficult personally. Another way to pay zero tax gains is to buy Bitcoin within an international life insurance policy. You can fund an offshore private placement life insurance, yada yada, but most offshore private placement policies require a minimum of $1.5 to $2.5 million. So yeah, I didn't like that one too much. However, buy a cryptocurrency as a resident of Puerto Rico was a pretty good option. for quite a lot of people. But if you're not old enough to have a large retirement account, you don't need to, or you don't want to lock up a couple $1 million in a life insurance policy, then consider moving to the U.S. territory of Puerto Rico. The Caribbean island of Puerto Rico has a tax deal you can't refuse. We, U.S. citizens, are taxed on our worldwide income. No matter where we live, we must pay U.S. tax on our capital gains, including gains from crypto. The only exception to this rule is found in the U.S. territory of Puerto Rico. Puerto Rico's sourced income is excluded from U.S. tax under IRC Section 933. Puerto Rico's sourced income is any capital gain or business income earned by a resident of the territory that qualifies for Act 20 or Act 22. A resident of the territory is any U.S. citizen who spends at least 183 days a year on the island. So again, you would have to move there. However, this again is talking about the fact that you made a freaking ton of money on crypto, or you want to trade really, really heavily and you're looking for a better place to go to. What you really have to do, if you are looking for the easiest way, we'll get to in a second, but it's also the least nice option I find of all of these. But all right, a resident of the territory is any U.S. citizen who spends at least 183 days there. Because the territory is excluded from the federal taxation, Puerto Rico is free to make its own tax laws for residents and offer any type of tax breaks it deems appropriate. And in 2012, with amendments in 2015 and 17, this is exactly what they did. If you set up an online business in Puerto Rico and qualify under Act 20, your Puerto Rico source profits will be taxed at only 4%, and distributions or dividends from the company to a resident of Puerto Rico will be tax-free, which I really don't understand because that's like a haven, but all right. A little bit down below, if you move to the island, spend 183 days a year there, buy a home within 2 years of moving, and otherwise qualify for Act 22, you'll pay zero tax on long and short-term capital gains. This means that trading profits from crypto are tax-free to qualifying residents of Puerto Rico. Finally, Puerto Rico is a popular jurisdiction for setting up large cryptocurrency trading platforms or an offshore bank. Act 273 allows you to build an investment management firm and only pay 4% in tax on your corporate profits. Act 273 is basically Act 20 for offshore banks. For more detail, of course, always do your own due diligence, as I'm not a financial advisor or tax advisor. I'm just looking some stuff up and telling you guys what I found. And the last one, which is what most people I've talked to were planning to do, is give up your U.S. citizenship. However, I think that's the most heavy option. But basically what this refers to is you give up your U.S. citizenship and you go for something like Malta, Dominica, St. Lucia, Panama even, because you can either buy those or really get those rather quickly, and your tax would be very, very low. However, the positive side is you have to pay less taxes. The negative side is you're not an American anymore. So it just really depends on what your goal is there. If you're in the US, just talk with a financial advisor about how you could potentially lower your gains. However, the difficult story about it is there's most likely not a very good way, except for getting outside of the US, to really get rid of them. If there are some schemes, one of your financial advisors, if you just call a lot of them, will most likely know. However, it'll also be a little bit of a sketchy business practice, and thus it is most likely not the safest bet if you want to be treated completely with a clean slate forever. So yeah, if you really want to be clean about it, these things are all legal. These are all just kind of good options. Again, moving to a different country is not going to make things a lot easier, because even if you move to a different country, you still have to pay taxes in the US as you are a US citizen. So that's definitely not going to change things unless you go for this pretty interesting to me Puerto Rico scheme, which definitely sounds like the best option there. Or you forfeit your citizenship or go for some company/investment outside of the US. Things are looking pretty dire, all right? Unless you want to do something sketchy or, just move out the country altogether. Those are your options, I think. If I missed something, let us know in the comment section down below. And guys, once more, I'm just looking this up and I'm sharing what I found. In no way do I think this is complete. In no way do I think that you should actually do this type of stuff, because you should always do your own due diligence, because I may have been wrong somewhere. I must let you guys know about that. But hey, make sure you press the subscribe button, because if I did make a mistake, I'll definitely update you guys very, very soon. And I'm hoping to release one video from now every single week. And I'm working on some very cool things. So stick around, as we have no ads as of this point. Maybe sometime in the future, but I will see. Thank you guys for watching, and I'll see you again in another crypto finance video, something like that.